All right, all right. What do we got going here? All righty. All right, we got live, and live. Look who's in the house. Sean, Benoit, Zach, Matthew, Jatinder, Thomas, MP Tackett, Robbie, Joycer, how are you doing? How are you doing? Dave, how you doing? Zach, Sassy, really? Okay, Joyce, how you doing? Michael. I think my throat is acting up already. This is not a good sign. Just getting started. The big bros, what's happening? Oh, here and now. Glow, Cindy, Raquel, Michael. Michael, good evening. Jimbo, June, Hollywood, Excel, what's going on? Jason, Bob Stevens, Mike, Jatinder, good evening, good evening, good evening. Check in shorts. Well, good evening to you too. All righty, let's get ready to roll. Let's get started. First and foremost, my name is James. This is Dividend Stock Talk, brought to you by The 10-Minute Trader, where I invest in dividend stocks for weekly cash flow, looking for a simple, safe, predictable, consistent 1% per week. Now, I know a lot of you may think that is boring. A lot of you may think that's not enough money. Well, it works for me. I'm not looking to get rich. If you are looking for a stock that's going to shoot through the roof and just make you millions overnight, you're in the wrong place. This is a very slow, very predictable, a very consistent 1% per week strategy created for a 9-year-old little girl. Michael, I recently started selling options and love your videos. Thank you. KG, how are you doing? Peter Raz, how are you? Riker, good evening. BW, Musty for West. Wampa, back again, I see. Becky Rich. Okay, so that being said, back in 2008, my 9-year-old daughter says, Daddy, what are you doing? Can you teach me? So how do you teach a 9-year-old how to invest in the stock market when most adults don't even know how to do it? Maddie, good evening. Sophia, Fight, Sean, Attorney Moham, good evening. Cole, good evening to you too. Don, Clinton, Amir, C-Clip, what's going on? Big time forever. Cool beans. David, Philip. All right, so all that being said, what we're looking for is a trading strategy, specifically for a 9-year-old. Simple, safe, predictable, consistent, no way for her to lose. Now, when I say no way for her to lose, let me explain it a little bit better. I cannot let me try that one more time. I cannot imagine a world where there's no more Coca-Cola, no McDonald's, no more Ford, no more General Motors, no more AT&T. These companies are part of our economy for the last 100 years. I don't think they're going anywhere. I think they might outlive me. I'm going to mute whoever's over here. Who's making that noise? Jim Bibby. Noise coming from you. Let's mute that, Jim. If you have a question, just unmute it and then speak up. Okay, don't be bashful. So, that being said, Joker, I forgot to ask you about Realty Income stock the other night. Well, we looked at it last night. True Hefe, what's happening? Oh, do UNH. A1 Steak, we did UNH last night. I can't imagine a world with no more health insurance companies. I can. Trust me on that one. All right. I think we could live a lot easier without life insurance companies or health insurance companies. But Coca-Cola, McDonald's, Burger King, I can't see us living without those. All right, let's get out of this. What the heck am I even doing there? All right, let's get out of that. There we go. And count. Well, here it is right here. All right. I should have had this set up. Apologize. Not ready to go. There we go. So let's get started. UNH seems to be the first one on the list tonight. What did I do with Foot Locker? Joe, hold on 1 second. You're going to love this, Joe, what I did with Foot Locker. Okay, so first one, UNH. I don't know why. It was a no yesterday. I don't know why it's going to change today, UNH. Oh, yeah, a new bottom on UNH. Let me zoom in a little bit closer. But first thing I always want to see is where's the high? Where's the low? Where was it a year ago? Where is it now? And what is the motion? Okay, down, up, sideways, down, up, down. Okay, so we're looking for a new bottom here. Right around 650 a couple of weeks ago. Well, now, a couple of months ago, sorry. And now we're down to 250. That's more than a 50% drop. However, it's going to keep going until it's done. And once it's done, then we'll have a better idea of what to do next. Oh, Joker, you missed last night. All right, sit tight. So here's the new bottom. Or is it? And that's a big question, especially coming into Friday, because that might not be the new bottom. It might go lower tomorrow. It might go lower Monday. We don't know. Until it stops, turns around, and goes back up is the only time we're going to figure that out. But we are keeping our eye on it. Okay? Lily, how you doing? Craig? Checking shorts, what's happening? Mac Daddy, good evening. All righty. Okay, we're going to take a look at Foot Locker also. There's a bunch of them we didn't finish up last night. Oh, Foot Locker. All right. All righty. What else do we have here? Oh, boy. TJ216, SMCI. SMCI. Could you do me a huge favor? Okay, TJ216. Could you, with your, let me think, go check out a financial website, whichever one you want. Yahoo Finance, Google Finance, NYSE Finance, whatever, CBOE, whatever you want to use. And tell me, before I spend time looking at SMCI, you tell me how consistently has that company increased its dividends? Okay, year after year after year after year. Okay, find that out for me, put it in the chat, and we'll cover it as soon as you come back. Michael wants to take a look at Apple. All right. Well, let me fix this. This is a mess over here. All right, here we go. So next on the list, we're going to have a Foot Locker because somebody asked me about Foot Locker. Well, let's take a look at it. Now, 5 things I want to see every time I look at any stock. Damon, how are you doing, Damoon? First time I ever look at a stock, I'm looking for 5 things. And it's simple, and it should take you 3 to 4 seconds. Literally, time yourself. 3 to 4 seconds. 5 things, right? High, low, is, what's the direction? Up, down, up. That should take you 3 to 4 seconds. That's it. Take a quick glance at it and see, yep, I want to take a look deeper. That's it. I want to look deeper because it's not at the high of the year. It's not at the low of the year. The low's right here and it's bouncing up. Well, it found the bottom right there. Could that be the bottom? Or can we expect more going down? It's a good question, especially if you own Foot Locker. Now, I do own some Foot Locker. Hey, John Connor, thank you for that. I'm not quite sure what I'm going to do with it, but I appreciate it. All right. Before we go further, if I'm going to buy this, let's understand one thing. I like a simple, safe trading strategy. I call it a covered call. Imagine that. Everyone else calls it a covered call, but I'm only doing a covered call on a quality dividend stock. Now, what do I mean by that? Well, companies have been you got 2 choices. Okay, 2. A company that will share its profits. Now, what I mean by sharing a profit, the main reason for someone to go into business, to start a business, is to make a profit. I mean, think about it. That's why you go to work. You go to work to make a profit. Anyway, so 2 choices when you make a profit as a company. What? You take all those profits and you reinvest it back into the company so that the company can grow fast and the stock can go up. If that's what you're looking for, you're in the wrong place. Hold that thought. All right. Joker, give me a second. NKE. I don't own Nike, but we'll take a look at it. Oh, check that out. Cool beans. All right. Second. Okay, first company, they take all the profits, they put it back in, the company grows faster. Okay, that's not what I'm looking for. I'm 61, I'm retired, which means my income from this little fun endeavor that I'm doing is going to pay for my retirement. So whatever money I accumulated is paying for my retirement. Okay, so company number 2, they take their profits and they share it with you and me in a dividend. That's what a dividend is. A dividend is a portion of the profits the company makes that they give back to you and me. Okay? Now, every week you check. This week there's 10,036 different companies. Now, out of those 10,036 different companies, somewhere I believe, if my mind serves me, 5,526, I think it was, pay dividends. Well, 5,500, that's a lot. How do I choose which one? Well, let me tell you how I choose. It's simple. Is the company consistently profitable for at least 2 decades? That's 20 years. Now, I don't know about you guys, and you will see as the night progresses, as the weeks progress, people ask me about all kinds of interesting companies, and I'm thinking to myself, what the hell is this person smoking? Why are you investing in this company? I ask that question almost every single night because what I'm looking for me personally, is a company that is consistently profitable. Now, when I say consistently profitable, I mean that every single dividend that they share increases every single year. Okay, so it is such a wonderful list that someone somewhere thought it was a wise idea to keep track of these companies that consistently profitable. Well, list number 1 is called the Dividend Kings. That means these companies, okay, I believe there's 54 of them, consistently increase the profits in which they share with their investors for over 5 decades. Some over 6 decades. Can you imagine that? A company is consistently profitable for more than 60 years. Danielle, I appreciate it very much. Thank you. Please just do it once because I try to keep track of all the comments. Okay, so please just once. I appreciate it. Thank you. Steven, my bad. I'm 22 minutes late. I'm from California. Well, then that's the reasoning. Sharon Stone, how are you doing today? Josh. Okay, so as I was saying, half the companies in the stock market do not share their profits. The other half does. So you got one set of companies that have consistently increased their profits for more than 5 decades. Well, there's another list called the Dividend Aristocrats. Now, these companies have consistently increased their profits, but for 2.5 decades, 25 years. Well, that works for me too. Just do it quick, please. Thank you. Just do it once. Okay, I appreciate it. That little rainbow you're sharing is a little annoying, but I do appreciate it, though. I do. Thank you. Please stop it. Next set, the Dividend Champions. Well, 300, wait a minute, no, 150 companies, sorry. The Dividend Champions, 150 different companies that have consistently been profitable for 25 years. That's a quarter of a century. Okay, for me, that works. Okay, then we're going to throw in the Dividend Contenders. That's about 300 companies. And then for the fun of it, Warren Buffett's list. Okay, because, you know, if it's good enough for Warren, it's good enough for me. That's my conclusion. So those 5 lists I just gave you will give you a pick of over 300 different companies that are consistently profitable for more than 2 decades. That works for me. Whatever you decide to do, hey, that's up to you. I'm just showing you what I want. All right, that being said, we had a question on Foot Locker and what did I do when Foot Locker made that big jump today? Well, we're going to zoom in and take a little close look at it and explain to you what I did. It was kind of interesting. All right, A year ago, Foot Locker is at 22.83. The high of the year was 34, and that was the end of August. Now, from the end of August at 34, this thing drops all the way down to 11 bucks. Can you imagine that? Let's go to this side. $34 down to 11. That's a 66% drop. Now, if you bought it here and now it's down here, how are you feeling about that? Now, I got in at 22. So how do you think I feel? 22's here. But as she dropped, I bought some more and it brought my dollar cost average down. Okay, Sean, we just did UNH not even 5 minutes ago. Okay, UNH, we already did it tonight. So take a look at the replay later on tonight because it is being recorded so you can watch it later. So let's finish up what I was saying. So it's a 66% drop. Now that's the bottom of the year. So if this is the bottom of the year and you make most of your money buying low and selling high, do you really think you're going to get it any lower than the bottom of the year? I don't know, it's a question. Okay, so you got a couple of questions to ask yourself. Question one is, does this make sense? Question two is, do I like this company? And question three is, do I like this company at this price? Nick, can you talk about UNH? Hey, Nick, we just did UNH not even 10 minutes ago. Okay? Isaac Blades, I actually do options and shares. So sit tight if you want to. If not, thank you for stopping by. Okay, so as I was saying, I forget what I was saying. I have that ADD thing. I lose track quickly. What do they call that? Squirrel syndrome? Squirrel. Yep, I got it bad. At least I can admit it and I can joke about it. It wasn't so much fun growing up. Lose track real easily, get distracted easily. Okay, so what did I do? Because I actually own some of this. Like I said, I jumped in at 22. I dollar cost average when it got down to 8. So now I'm somewhere around the 16 area. Okay, so we're at 23 because we were 12 bucks last week. Now we're at 23. That is a 100% increase in 2 or 3 days. Well, if you don't take your profits, I don't know what to say. I mean, that's just awkward. But the rumor has it, okay, nothing's solidified as far as I know, but rumor has it there's a buyout offer on the table at 24. So that's why it jumped up. Now, is that going to go through? Don't know. Now, I didn't know that when I bought my shares months ago. I also didn't know that Monday when I sold my covered call this week against Foot Locker. Okay, so I sold my covered call, I think it was at 12 or 13, some weird number like that. And then the thing jumped up overnight. And the option that I sold for 50 cents is now worth 10 bucks. Talk about, a couple of 100% increase overnight. And it must have been nice whoever bought that thing. But in order for me not to lose, because remember, I'm in at 22, I dollar cost average down to 16. So I'm at 16, and I sold the 12s. Well, I'm in deep doo-doo, so to speak. So I had to go in and do what's called a rolling forward. So I took a rolling forward approach, and it was offering me $0 to roll it forward, which who the hell is going to pay $0 for an option? Needless to say, I figured out if I drop the strike price from 12 to 11, then I can pick up a $1.10 profit. Okay, so it's a $1.10 profit for moving the strike price down. So what does that happen? Well, now I'm on the hook at 11. But here's the thing. Whenever you sell an option and buy one back, say I had to buy this week's option and sell next week's option. Well, that transaction created a new break-even point. Okay, so what I ended up doing is collecting $1 per share, lowering my strike price, pushing it out another week, and then the dollar cost average changed because whoever bought that option this morning paid $11 for that option. Okay, remember? I sold it Monday for 50 cents. Today, I had to buy it back for 10 bucks and then sell next week's for 11. So the new break even is, I think it's like 24.10. It's like, who in their right mind is going to buy my stock from me at 24.10? So I made a little bit of money. I dropped the strike price. I pushed it out a week. I also increased the break-even point. So remember, the break-even point is a very important number. No matter what you sell the strike price for, okay? So I sold the 12, giving somebody the opportunity to buy it from me at 12 bucks. Anytime between now and on the 30th, which is not next Friday, but the Friday after. So anytime between now and 2 Fridays from now, the 30th, whoever bought that option can buy the stock from me at $12. But they're probably not going to. And the reason why is because they paid $11 per share for that privilege. So if you add the premium that I collected to the strike price that I sold, it comes out to $24.10 or $24.05, something like that. It's not very attractive for someone to buy it from me because the stock right now is a lower cost than the if you combine the two together, the $12 option and the $12 strike price and the option that I collected. So it doesn't make it attractive. So I basically gave myself some more time, brought some more money in, and increased the break-even point. So I'm not at risk of being called out, even though I sold the 12, which is down here, and it's currently at 20, almost at 24. You would think somebody would exercise that, but it doesn't make financial sense. So I'm kind of safe. TJ216, O as in O Realty. Okay, O Realty is a monthly optionable stock, and that's always a no. Okay, so Foot Locker, to make a long story short, I do own Foot Locker. Okay, however, it gapped up Monday, and then today it gapped up huge. Okay, so I'm not at risk of losing because I increased the break-even point. So more than likely, depending on how the rumors settle up overnight and tomorrow, is this thing going to go higher, or are people going to start taking profits? Well, I'll tell you one thing. If I bought down here at 12 or somewhere around 12, see all this area down here in the $12 area, well, now it's at almost 24, which means you doubled your price, you doubled your money in about a week. There are going to be a lot of people that jump in on that. And then when they start taking profits tomorrow, if they start taking profits tomorrow, that price hypothetically should come down. It's not guaranteed. There's only 3 guarantees in life, and that ain't one of them. All right, so let's keep on continuing. What do we have next? Hey, buy and hold stocks, Pepsi. All right, dividend is another pipeline in a portfolio. Okay, thank you, Stephen. Options are a lot. All right, anyway. Thoughts on KHC? I love Heinz ketchup if it's at the right time to buy it. From Drummond Geometry. Misty, K. Dreyfo. Is that right? Dreyfo? Sacco? Yeah, MSTY. Do me a favor. Before we talk more about Misty, go to a financial website and then let me know how many years they've increased their dividends. Okay? And then we'll take a look at it. Okay, so I'm waiting for you to go in there with a number, come back with me, come back with a number. How many years has Misty increased its dividends? Still 120%. Yeah, I know exactly what it is. You don't need to remind me. I'm just wanting, yeah. Yeah, so you like the 120%. You don't really want to look at the numbers. Steven, have you ever thought about buying 120 shares when opening a position if it's a good entry? You can sell a call and take cap profits on the unassigned shares too. If the stock drops, you can dollar cost average with another 80. Yeah, it sounds interesting, but I haven't bought in less than increments of 100 in over a decade. So I'm not quite sure. Well, I know how to do it. It just, why would I? Okay, for some people, you might have to. If you're just getting started, if you're just getting started out and you don't have a huge capital, which I understand for a lot of people, just starting out. Okay, but I've been doing this for over 20 years, so my capital is just a little bit bigger. So if you're starting out, yeah, it's going to take a little bit more struggle to get there. But journey of 1,000 miles starts with a single footstep. So you got to start somewhere, wherever it is. All right, that's Foot Locker. Okay, next on the list, what do we have next? Dun, 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 dun. Okay, TJ, Realty, huh? TJ, you ready for this? Okay. 16 May, 20 June, 18 July, 19 September, 19 December. Okay, that is what is called a monthly option, which means I can only trade it once a month. Now, we all know once a month is only 12 times a year. So if I'm averaging 1% to 2% on the option trades that I do, because they're very conservative, well, 1 or 2% a month comes to 12 to 24% per year. If you're okay with that. Okay, me, not so much. I like 1% to 2% a week because that comes to 50 to 100% a year. And I don't like trying to time a monthly option because it's very challenging to figure out where a stock is going to be from today, 30 days from today. Because they go up, they go down, they go up, they go down. So what's going to happen in 30 days? A lot can happen. That's not a game I want to play, especially if I can play a game with every 7 days. Okay, so every 7 days, I play that game. You know, what's the stock at? What's the best position for me? You know, all that kind. Oh, Little Monk, same thing to you. I don't do Realty. I don't do monthlies. Little Monk sold UNH 220 CSP. CSP. Explain to me CSP. Cash secured put. Got it. All right, never mind. Steve. Build confident. Steve, there. Fail accepting. Go slow. All right, not quite sure what that means, but okay. Cash secured put. Yeah, it took me a while to get there. Okay. All right. 1% a week dividends, not 1-0. Cute. All right, let's keep on going. Next on the list, who do we have today? All right, Hannah, good evening. One Way to a Million. Cool beans. Like that name, One Way to a Million. Hannah, Michael Armstrong, cool beans. Porter, how you doing? Cruiser, what's happening? The truth. You can't handle the truth. Ha. Plug power, ain't gonna happen. D-Rack, what's happening? Alex. Dubstep, cool beans. David, what's happening? Oscar. Oscar's Family Shop. Oscar's Family Shop. What do you do, Oscar's Family Shop? Okay, Kunan. ICAP Goats. Talking with the hands is something for the dying generation. Oh my God. Actually, it's a trait of Italians. Okay, we talk with our hands. Dying generation. Thank you for that. Put Subway Surfers on the TV instead. Okay. Bobo wants to take a look at Wally World. So let's take a look at Wally World. WMT. Okay, I was drawing a blank there for a second. Wally World, let's check it out. Stop streaming. What is swimming? Not quite sure what that means, but all right. Walmart, here we go. The high, the low, where was it? Where is it? Look at the motion. Up, down, up, down, up, down, up, down. Well, what's going on here? Well, it's not at a high, it's not at a low, but what's going on here is what I'm interested in. Because this is a year ago. This is now. That's what I want to find out. But before we move on, current price right at the moment is $36.35. So the closest strike price could be the 96 or the 97. Either one is going to give us over 1%. And that's what I'm looking for, 1%. 310 Life, we'll take a look at Able Mountain a little bit. Target, we'll write that one down. All right. Let's keep on keeping on. All right, let's zoom in. Let's zoom in. A year ago, we're at the bottom at 62.91. The high of the year was 105.54, and that was in the middle of February, 90 days ago. Well, 90 days ago, we're up here, 104. Then we dropped down to here, just below 80 in the first week of April. Then she shoots up, and now she pulls back. So down, up, down. It's coming down now, so it's no sense us even looking any further. We can put it up for next week. Take a look at Walmart next week, because we're like 2 days to the upside. WMT next week. That works. Sorry, Bobo. Okay. Stephen, 1% a week is good. You using the compound strategy, it's still profit. Thank you there, Stephen. Antoine, dude, haven't heard from you in a couple of days. Hello, Mr. James. Do you know what caused Foot Locker to jump up 10 points today? Yep, talks of a takeover. Okay, there's an offer on the table from what I heard. Okay, I haven't fact checked it, so don't quote me. From what I heard this morning, there's a offer on the table at $24 a share. Okay, so they may take it, they may not take it. Who knows? Let's see what happens. Next on the list, Ablemal, ALB. ALB, another one I like on my list. ALB. Okay, high, low, is, look at this, down, up, down, up. Well, that's awesome because look, here's the bottom of the year right there. Now she's bouncing off that. You got the high at 140 and the low is down here at 50. That's another company over 60% drop. From the high to the low, that's about 60%. Ooh, ouch, that hurts. Anyway. Oh, before we move on, ooh, $60. $60.32. Okay, so the 60 is going for 210. Oh, that's nice. That's over 3%. The 61 is going for 168, and that's over 2%. Well, I like those numbers. 1% a week is right around 50% a year. 2% every week is over 100% a year. Okay, 3%? Hell yeah, I'll do that. All right, let's take a look at the numbers. A year ago was the high of the year, 137.72. The low of the year, 49. That's a big drop. Now, 90 days ago, okay, high, low, is, look at it, down, up, down, up. Simple enough, right? But look at right here. I want to zoom in a little closer, look at the 30-day chart just to see, is it the right time to buy or do we need to wait a couple of days? Okay, down, up, down, up, down. Definite on the downside. Okay, here's your 30-day high right here, Monday. Tuesday was lower, 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 so now we're going down. I like to wait 2 days after it drops, turns around, goes back up. So that's why we look every single day. Ooh. Next. Oh, Fab wants to take a look at American Airlines. Oh, I'll try that one again. Here we go. High, low, is. Look at it. Down, up, down, up. Great. It looks good on the 1 year chart, but we'll zoom in a little bit. After 1176, the 12s are going for 31. Okay, 31 is over 2.5%. Well, 2.5% is lovely. All right, let's see what we got here. A year ago, we're at 1515. The high of the year was in the middle of January, and that was 1915. Well, from there, she falls down to the bottom at 850, and that was in the beginning of April. Well, look at the last 30 days. What do you think? Here's the bottom, here's the top, now it's coming down. Sorry, what goes up must come down. Spinning wheels. Had to go, hey, yay, baby, he's in the house, woohoo. That girl, Asia. Good evening, Asia. Theo. Good evening, Theo. Theo wants to take a look at Ford. Let's take a quick gander at Ford. Everybody likes Ford. Okay. Did it again. Here I'm saying there's no possible way Ford can go up 5 weeks. But look at this. Another high today. We're going on to 5 weeks on the upside with Ford. Well, let's take a closer look. Okay, a year ago, we're at 1239. The high of the year, well, that was out 1487, and that was the middle of July. Well, the last 90 days, which is the last 3 months, okay, look, up, down, up. Well, look at how many weeks this thing has been going up. And we're here at 850 to 1075. That's a big jump. So, me personally, I wouldn't do it. But that's me. Because I like to buy here. Remember, it goes up, then it comes down. At the bottom, she turns around, goes back up. That's where I want to jump in. Not here, but here. The third day on the upside. Because it can only be one 30-day bottom, and it can only be one 30-day top. Well, here's the bottom, here's the top. Okay, you hit a bottom. People say, wait a second, Ford at $8.50? Yeah, sign me up. So what happens? $8.50, and this baby starts shooting up. Well, now we're at $10.25. Okay, that is that's a little bit more than 25% increase in just a couple of weeks. So why the hell not take the profit? Well, apparently nobody's taking the profit because it keeps going up. How far is it going to go up before it finally turns around and goes down? If I was a gambling man, I'd start buying some puts up somewhere in June or July. Okay, because there's no possible way this thing can keep on going. Anyway. Okay, Mortgage Magician, we already did Foot Locker a little while ago. Next on the list, Able Mile, we did. American Airlines, we did. ADM, Advanced. Wait a minute, Advanced? No, wait. Archer Daniel Midland. Oh, didn't we look at that one yesterday? Same thing. Yesterday we looked at this one. Okay, remember yesterday we said it would be profit taking? And there was. Now it's coming down. Well, how far down is it going to go? Well, you got your bottom here. You got your top here. How far down is it going to go before it stops and then turns around? Well, I like 2 days to the upside. Well, we got to find the bottom first. So I'm just going to keep my eye on Archer Daniel Midland. Now, it is on my list because it is I think it's a dividend king or a dividend aristocrat, one of those. NEE, N-E-E. Isn't that Nextera? Yep, Nextera Energy. Okay. No. Wasn't that quick? Did you see that? Not even 2 seconds and it was a no. Why? Well, take a look at this right here. Okay, you got your bottom here, and you got your top here. That's not a game I want to play. Okay? If I was investing your money, I wouldn't do it. If I'm investing my own money, I sure as heck not going to do it. Bottom here, you're up here now. Yeah, there's profit taking just waiting around the corner. Now, I don't know when it's going to be, but it's going to be sometime. Because you can only have one 30-day high, and that's today. Now, could it go higher tomorrow? Yes, it could. Is it going to? Don't know. Anyway, Jasmine, how are you doing today? Hormel. Ooh, Hormel, H-R-L. Now, Hormel is a dividend king. Been around for quite a while. Look at that. High, low, where was it? Where is it? Down, sideways. That's basically the only thing that thing did. We're at 30.16. So 30.16, the 30 is going for 40 cents, but I'm losing 16 cents off the top, so I'm walking away with 4 cents. Yeah, no thank you. the 30/50 is going for 15 cents. That's only a 0.5%. No, sorry. Hormel is one of those dividend kings that's been around for over 100 years. So they don't need our money. Okay, Coca-Cola, Pepsi are very similar. Sometimes it can be challenging to get a decent 1 or 2% out of these big companies. But I still like to look at them anyway, because every once in a while they do. And when they do, I buy it. What did you do with Foot Locker? Okay, Mortgage Magician. What I did with Foot Locker is videotape from this morning's trading group. Okay, this morning's trade. I rolled it forward. I decreased the strike, gave me an additional week, and I brought in extra money. So I thought it was a win-win situation. Brought in extra money, changed the break even, and gave myself an extra 7 days. Well, that works for me. Anyway, that's what I did with it. Howmet Aerospace Reborn. I've never heard that. HWM. HW helps if I actually have it in place. Oh, wait a minute. We haven't finished with Hormel. Oh, no, we did finish with Hormel. The numbers don't look that good. Okay, so HWM. Is that right? HWM. Nope. Wasn't that quick? Now, who wrote that one? Okay, Reborn. Here's the issue I'm having. It's at the high of the year. Okay, all my years of investing, I've never, ever purposely bought at the high of the year. Because if it was worth more, it would have been higher. Okay, it's only worth 61.29. Is it worth 161.50? Well, no, it's not. Because if it was, that's where it would be. So it's someplace that it's never been before. You're asking it to go higher. Might, it might not. Not a game I want to play. I want to take my marbles and go elsewhere. Boring. This is way too boring. Samir, terribly sorry, dude. Expectations of a gap fill. Yep. Steve. There, the rubber band. Yep. David. Do you use supply and demand, buy low, sell high? How do you gain a profit? Oh my goodness. I have bad news. EPD 445 has gotten his cupcake. I have no idea what that means. Anyway, let's keep on keeping on. Next on the list, Gail. Good evening, Miss Gail, and how are you today? Okay, ES. When you do every 7 days, on which day of the week do you make most of your trades? Monday. What do you do if you sold a lower strike call than your buy price and it goes deep into the money? Okay, theta burn. Always are going to be about the numbers. What did I buy it for? What did I sell it for? What did I collect? What is it worth now? What are the odds and probabilities of it being where at what time between now and the date of expiration? A lot of ifs, ands, and buts. Okay, there's lots of ways to get out of a trade without losing. I took 2 losses this year. That's it, 2. What program to read those charts? There isn't a program to read those charts. Okay, I use the old-fashioned eyeballs. Okay, where's the high? It's right there. Where's the low? It's right there. What direction is it going? It's going up. That's how I read that chart. Simple. I don't want things being complicated. A1 steak, PE 10 point, wait a minute, PE 10, price earnings, okay, and 4.7% dividend. I have no idea what that means. I know what it means, but in context for me, it doesn't mean anything. Okay, either I like the company or I don't. I don't pay attention to what you're targeting. I don't look at the PE ratio. I'm not buying it for the PE ratio. I'm buying it for the premium, the insurance policy, that right there. if it's in a trend going in the direction in which I like, if all the odds and probabilities are in my favor, then and only then will I make the trade. Okay, I don't base it on those numbers that you hear people squawking about all the time. No, I use logic, reason, and common sense. It's very awkward because they don't teach common sense. A1 stake, target. Okay, interesting. High, low, was, is. Now, target, take a look at the motion. Down, sideways, down, sideways. We're at 97. Okay, so the 97 is going for 495. That's close to 5%. Actually, that is 5%. Well, that's nice for target. But here's the thing. You got to be very careful on target. Target is, I'm going to show you so you can actually see. Target is very, very, very susceptible to black swans. Okay, so let me show you. Dividend way over here. Black swan to the downside. Dividend right here. Black swan to the upside. Dividend right here. Black swan to the downside. Okay, and dividend here, that's a smaller black swan, but it's still one. You know what a black swan is? It's an event that is rather large. Okay, so you got the close. You got the price here on 8/20, August 20th at 144. A white swan event, a black swan event is when the stock moves erratically, either to the upside or the downside. So at 144, she opened up at 167. So let's go from 144 to 167 overnight. That's a black swan event. You don't know it's coming. It just appears out of nowhere. Okay, you see a flock of swans, all these beautiful white swans swimming around, and all of a sudden you see a black one. You barely ever see black swans. But this company is notorious for black swan, either to the upside or to the downside, right around the earnings and the dividends. Okay, that's what these little markers are right here. Okay, I think the blue is for the earnings, green is for dividend, and the red is for a conference call. Those are events in the company. Won't think or swim unless you see those. But I got burned on target years ago. So I bought it at 135, it dropped down to 102. And then on November 11th, or November 10th, I think it was, it shot up $30 overnight. It gapped up $30. And I just lost, I had a choice. I lose 15 grand or I lose 35 grand. There was, at that time, I didn't know what I know now. Oh my God, my voice is going bad. I might not be able to do the whole night tonight, guys. Is that better? Little better, not much. Anyway, let's move on. Target. Okay, I'm going to say no to target because this is where we are. Bottom's here. She shoots up. Now she's pulling back down again. Wait for target. Wait for a good movement. Wait to see what it is you want to do. Steven, green, gray, and black swan events. New to me is the white event doing DDs. Thanks. I have no idea what that means. Sounds colorful though. All right, let's go back to here. Okay, ES, when you do 7 days, on which day of the week do you jump into most trades? Mondays and Tuesdays. Elliot, does the volatility that Trump brings made it harder to secure 1% every week? Not at all. Ever since old Orange Boy jumped in, the numbers I've been receiving are the biggest I've seen in over 2 decades. It's crazy. I've never seen it this high. I'm over 40%, and we're not even halfway through the year. Okay, 3 accounts are over 40% return, and I'm not even halfway through the year so far. And these are extremely safe trades. Extremely safe. And I post all of them so you can see exactly the trades I make every single week. So every week I post the trades I made for the week, and I post what I made on 3 accounts. I got 7, but I post on 3. Okay? So you can see what I do on all three. Okay, anyway, besides the point. But the numbers are crazy. So no, the Trump thing is not affecting me whatsoever. It's actually reversed. It's giving me more money than normal. So I'm not normally getting, okay, anyway, besides the point. M. Hodds, T-Doc. What the heck is T-Doc? Let's get out of here. T-Doc, T-Doc, okay. So T-D-O-C, what the heck is that? Okay, interesting. All right, the high, the low, where was it, where is it? Look at the motion, down, up, okay. So Teladoc Health. Now, I'm gonna give this one the benefit of the doubt. I've never heard of it, and usually if I never heard of it, it's usually gonna be a no, okay? Because I've been doing this long enough to recognize stocks that consistently pump up. I've never heard of this one, but I'm going to go through the motions anyway, just so you know that I'm not predicting these things incorrectly or not giving advice. Anyway, look at the motion. Okay, down, up, down, up. All right, fine. A year ago, we opened at 13. Okay, the high of the year was halfway through February, 15.19. Now look at the drop from the middle of February. So from the middle of February, okay, but 90 days ago, it drops, finds the bottom here in April. And there's a lot of up, down, up, down. It looks like it's coming down at the moment, so it looks like it's going to be a no for this week anyway. Okay, that's very easy to see. Down, up, down, up, down. So if you like it, and that's always the big question, never buy a stock unless you plan on holding it until the day you die, pass it along to your children. If it's not worth that kind of commitment, don't buy it. Because you're here for a reason. You're here to make money from whatever money you have. Because believe it or not, we're the only species on this planet that's got to pay to live here. Okay, we got to pay to live here. Okay, cats, dogs, birds, even the rodents don't have to pay to live here, but we have to pay to live here. So depending on how you want to live will depend on how much money you're going to need when you come time to retire. Okay, now there's 3 ways to retire. 3. 1, aging out, which means you're too old to work. Okay, you come into work and say, nope, hold up, nope. Go home, enjoy the rest of your life, no need for you to come in again. Means you're getting too old to work, you're aging out. Not many people get there. Number 2, you can toe tag out, which means you die at work or die on your way to or from work. Oh, I know a lot of people that did that. Okay, my friend's brother, walking out of the house, walking to the car, didn't even get halfway to the car, just fell out with it. It happens. And then my friend died too. Anyway, so as you get older, then more of them go bye-bye. So what I'm trying to say is, at some point in time, your money has to come from somewhere. However you want to live your golden years, so to speak, okay, is going to depict now. It's going to dictate, that's where, it's going to dictate how much money you need on a monthly basis. All right, so anyway, let's keep on moving. So yeah, so this one's up, down. It's coming down. It's going to be a no, but thank you anyway. Thank you for playing. 310 wants to take a look at PPG. All righty. That's going to be a no. Look at that. Here's your bottom, here's your top. Now it's coming on the downside, which is a good thing because you got a 3-day bottom, 30-day top. Great. Well, when it's done taking the profit, it will find a bottom just like this. It will turn around, go back up. Because stocks do 2 things and only 2 things, okay? Number 1, they're not going to come to your house and take the dog for a walk. They're not going to empty the trash. They're not going to wash the dishes. They're not going to make the bed, put little candies on the pillows. No. Stocks go up. Stocks go down. And guess what happens after that? Stocks go up. Stocks go down. That's all they do. They don't do anything other than going up, down, up, down. That's it. Okay? So the idea is to plan and to have the odds and probabilities in your favor. So if a dividend stock, a company that shares their profits, is getting ready to pay a dividend, and the stocks have a tendency to go up in price just before the dividend, well, that's great information to have. Well, you can't do that with a company that doesn't pay a dividend because there's no predictability to it. Okay, now stocks that do pay dividends have what's called a predictability pattern. Okay, so when they're paying their dividend, it's on a calendar. It's marked right here. Okay, all these little green dots. And there's a whole bunch of them. Okay, there's 4 dates when it comes to dividend stocks. Date number 1 is the announcement date. Hey everyone, my name is James. This is Dividend Stock Talk. We made so much money this year. This is how we're going to pay it to you, when and where. That's the announcement date. Date number 1, the announcement date. Hey, this is whoever, blah, blah, blah. This is how much we made. This is how much we're giving you. The announcement date, number 1. Number 2 is the EX dividend date, also known as the last day the stock trades before the dividend is paid out. Date number 3, the date of record. Whoever owns the stock on the date of record is entitled to the dividend. Each one of these little green dots here represents a company that pays a dividend, and that's the date. So if I know the stock, let's pick one. Let's change this list just a smidge. There we go. Okay, Aflac, right there. Aflac, where's right there. So Aflac has an EX date on the 21st and has a 58-cent dividend. So if you want to collect that 58-cent dividend, you have to buy the stock before this date, which means the 20th, the 19th, the 13th, the 1st, the 30th, the 28th, the 9th, the 16th, whatever day, as long as it's before that date. If you want to collect the dividend, you have to buy it before the EX date. Okay, date number 3. Oh, that was date number 3, the date of record, whoever owns it. Okay, anyway, date number 4 is the date you get your money, the payment date. So 4 dates: announcement date, EX date, date of record, and payment date. Okay, if you want to play the dividend game. So knowing when a company is going to have a dividend, okay, I like to jump in 2 weeks before. So here's the dividend in Aflac. 2 weeks before will be the week of the 5th. And stocks have a tendency to go up in value. So knowing that information, well, what trade do you make? There's a lot of them out there. There's a lot of strategies. There are. Let's take a gander at some of them. Okay, now you have your regular strategy, just buying or selling the stock. We'll take a look at these. Single option, vertical, back ratio, calendar, diagonal, straddle, strangle, covered, synthetic, butterfly, condor, iron condor, vertical roll, collarwood stock, double diagonal, unbalanced, deep and wide. This is just some of them, because if I click on these down here, oh, look at that, it gives me some more. And if I go a little lower, oh, it gives me even more. And if I go just a little bit lower, oh, look at all of those. Okay, so there are lots and lots of trading strategies you have. So what little tidbits of wisdom do you have? Number 1, the company is consistently profitable, meaning they give you increased dividends every single year, year after year after year. That's number 1. Great. Remember, we're not choosing any other company except for those that increase their dividends. So point number 1, they increase their dividends every year. Okay. Number 2, the dividend is coming up within the next 2 or 3 weeks. Number 3, is it an uptrend or a downtrend? And number 4, well, what strategy am I going to use? Well, I like the covered call because it's simple, it's safe, it's predictable, and it's consistent. Okay, when I say predictable, okay, it means I know what I'm going to make before I even do the trade. Now, when you buy a stock, you got no clue how much you're going to make until you sell it. Well, I covered call. Hey, thank you for that. Oh, look at this. Keep them racking up. When you buy a stock, just the stock itself, you have no idea what your profit's going to be until you sell it. But a covered call, you buy the stock, you sell the option immediately together at the same time. So you buy the stock, you sell the option, and you know exactly what your profit's going to be before you even buy it. Okay, what's my profit? My goal is 1% every week. So 1% every week is over 50% per year. Terribly sorry, but I like the idea of 50% per year. It works for me. Okay, so if I actually listen to traditional bankers and what do you call those, money managers, I'd still be working. Because what do they offer you? Think about it. You take a look. Take a look at the numbers of some of the big ETF funds that are offering. What is it? 3%, 5%, 8%, 10% per year? Well, the amount of money I have and my obligations just wouldn't mesh. It means I'd still be working, punching a time clock. Yeah, no, thank you. But 1% a week, 50% per year, that changes the whole ball game. For me, anyway. So this way, I, 15, 20 minutes in the morning, then I'm done and over with and go about my day. Heidi, what's happening? Heidi, Hody. All right. So, Porter, scale 1% to 100%. What the percent one can make 2.5 a week? Okay, well, 2.5 a week is 150% per year. New here. Tell me about tomorrow. Is it red or green or choppy day? Okay, love, I have no idea specifically what you're talking about. If you could briefly explain, okay, it might be better. Laurie, good evening. How do you get the dividend? Is it deposited into your account or mailed to you? Ooh, see, Laurie, on an account, you have a choice how you want. So,